Hello, and welcome to this week's edition of the Echo45 Advisors Market and Economic Update. My name is James Sutton, Director of Portfolio Management and Technology, and I'm filling in for John this week. In this video, we'll discuss the recent surge in precious metals and what it means for investors. Gold and silver have both captured significant attention lately, with gold surpassing $4,700 per ounce and silver trading above $90 per ounce. These are historic milestones for both metals. With such strong performance, it's natural to wonder about the role of precious metals in a balanced portfolio. What it comes down to is the fact that investing is not about chasing returns. Instead, it's important to maintain perspective and understand how these assets fit into a well-constructed investment strategy that is aligned with financial goals. Over the next few minutes, we'll walk through some historical context that underscores this point. First, several factors have contributed to the surge in precious metals. One of the most significant has been recent tensions between the White House and the Fed. This has raised questions about central bank independence and monetary policy direction, especially as Jerome Powell's term as Fed chair ends in May of 2026. Lower rates and the prospect of inflation put downward pressure on the dollar, leading some investors to seek assets that can serve as a store of value, including gold and silver. Another important factor is that central banks around the world have been consistent buyers of gold in recent years. These purchases have accelerated amid heightened geopolitical uncertainty and concerns about currency stability. Both metals have also benefited from their industrial applications in electric vehicles, solar panels, and artificial intelligence hardware. So precious metals can serve multiple roles, which have driven their values higher in recent years. The challenge is that precious metals, like other commodities, can experience boom and bust cycles. For example, in the 1970s, both gold and silver climbed dramatically as stagflation hit the economy. Similarly, both rose during the 2008 financial crisis and again during the 2020 pandemic. However, in each case, prices began to reverse once conditions started to improve. In many cases, it then took decades for prices to return to their previous peaks. This creates challenges for investors attracted to these investments based on recent performance. The chart here shows gold's performance compared to the S&P 500 since the 2007 market peak. While gold has had periods of strong performance, the stock market has still outperformed over the full period. So, the case for including precious metals in portfolios is based on the fact that they behave differently from stocks and bonds. However, precious metals also carry important limitations. Most notably, they generate no income, unlike bonds or dividend-paying stocks. This lack of income also makes it difficult to properly value these assets, which is another reason they are prone to booms and busts. The chart here shows that many asset classes have contributed to portfolio returns recently, not just precious metals or commodities. It's important to not lose sight of this fact when investing and planning for the future. We hope you found these insights helpful. If you would like to learn more about gold and silver or how they might fit into your investment strategy, please don't hesitate to reach out to us. We look forward to speaking with you soon. Have a great week.